Hello and welcome to second part of this 3-video series on what India's top fund houses are buying. In the first part, we discussed top funds in flexi-cap category and investment decision taken as of February month. In today's video, we'll discuss top funds in mid-cap category and their investment decision as of February month. But in case you have missed the first part, I'd strongly recommend pausing this video and watching the first part. Alright, let's get started. Now let's discuss part 2 of the series, that is mid-cap category. Before that, a quick disclaimer. This video is not to give you a buy-sell call. In fact, none of my videos are for buy-sell. Right? So I know a lot of people simply watch videos to get those tips, but I don't do that. In fact, I clearly say if you are here to watch my videos on my channel for buy-sell tips, please don't watch it, because I cater to a specific set of audience that have that sense of maturity, that has that sense of understanding of market. And that's where I know it's a very small set, but I cater to those kind of people. And again, if you're someone who understands the importance of long-term investing, who understand fundamental analysis, and do not get enough time to track the market economy, I try to add value. I've got an exclusive weekly video series on my website where I discuss my own investment strategy, the thought process, what I'm buying, what I'm selling. Right? Again, not to give buy-sell call, but to help you understand the investment thesis. In fact, I also track nearly 200 companies. A lot of them that I've discussed on my YouTube channel that I track every quarter result, I track them closely. So I do these exclusive videos every week that are 30-40 minutes long. Like I said, not for those who are looking for tips, okay? So that's a quick disclaimer. Okay, moving on, a very important slide that I discussed in detail in previous video. I'll quickly walk you through. First important point, I never shortlist a mutual fund based on last 1 or 2 years of return, because there is no guarantee that the fund has generated great return in last 1 year, would do that in the next year as well. In fact, there have been cases where the fund has been a worse performer in next year, right? So please don't invest simply based on that. Second, I look at the investment style, right? Usually they have got value style, momentum style. I personally prefer value style. On returns, don't look at point in time return, always look at rolling return. Next, it's not just about return, it's about risk adjusted return. That's where you should look at Sharpe and Sortino ratio. And finally, it's a combination of investment style, history of fund house, and the risk adjusted returns, right? So let's first discuss this HDFC Midcap fund in this category, which is one of my top pick. And if you look at the return, this fund has generated nearly 20% CAGR return since inception. Of course, the fund size is quite big now, nearly 94,000 crore, right? And if you look at quick details, expense ratio around 0.76%. They've got an exit load of 1%. AUM is, like I said, nearly 95,000 crore. Then age is 13 years for this direct fund, but the regular fund, the original fund, so there are two categories, right? Regular and direct. Regular fund of HDFC Midcap was launched on May 2007. So next year, May, it will turn 20 years. That shows how long the history is for this fund house. Then if you look at quick returns, if you had made an SIP of 10,000 rupees 10 years ago, total investment would be 12 lakh. Today you would be sitting on corpus of 32.75 lakh. That's a CAGR of 19%. Right? We have discussed it for Flexi Cap. Within that we discussed Parag Parikh and HDFC Flexi Cap. Next very important metric, returns. 23% CAGR in last 2 years versus category average of 20. Beta is also quite low. Then very important metric, which is the risk adjusted return, that is measured by Sharpe ratio and Sortino. What is the difference between these two? So Sharpe look at the volatility on both positive side and downside. Sortino says that if it is positive, great, I don't mind. But the negative volatility, downside risk should be low. That's why the more practical metric to measure the risk adjusted return is Sortino ratio. And HDFC Midcap has got 2.45% Sortino versus category average of 1.65, which is great, right? Next, if you look at a quick asset allocation, it is mostly invested in equity, 94%. Within that, large cap is just 8.9%, mid cap is 65%, small cap is 20%. So nearly your 85% is invested in mid and small cap. Top sector is financials. Again, look at this. In previous video on Flexi Cap, Parag Parikh was holding 25% exposure. HDFC Flexi Cap had 35% exposure in financials, and your HDFC Midcap is also holding 26% exposure, followed with healthcare with 13.6%, then auto and then services. What are the top 4 picks? First is Max Financials. This is basically a holding company of Max Life Insurance. So it's betting on life insurance theme. That's a top holding. Second, Federal Bank. Again, we have discussed Federal Bank multiple times. In fact, I call Federal Bank Rahul Dravid of Indian banking. Third, AU Small Finance. Again, it was a small finance. Now it has got a universal banking license. Fourth is Indian Bank. So all top are from your financial sector, right? 3 banks and one insurance, right? A financial company that has got 100% holding in Max Life. Next, moving on, the stocks that this fund house has bought. So first is Max Financials. It was holding 4,000 crore of equity, added another 500 crore. Again, small change, but a significant one in terms of latest February allocation. Second is Fortis. Again, why Fortis? We have recently discussed an entire hospital theme. Why I believe hospital can be one of the great theme for India over the next 10-20 years. It's a recession-free sector. AI is not going to impact. In fact, hospitals are going to benefit from AI. Right? So Fortis, it was holding 2,400 crore. Now it is holding 2,900 crore. Then Cummins India, very interesting. It is a play on your data center. It is a gold standard company in diesel generators. Okay. In fact, I've recently done 2 videos on data center where I've discussed Cummins in one of the value chain. Do watch that video. So it was earlier holding 1,800 crore. Now it is 2,200 crore. So added another 353 crore. Next is Vishal Mega Mart. So that's your value fashion retail, right? So earlier it was holding 2,100 crore. Added another 329 crore. So now it is 2,500 crore. And last is Bharat Forge. Earlier it was holding 927 crore, added another 300 crore, so 1230. Bharat Forge is a play on forging plus defense. And very, very promising company. We have discussed this company also in detail. Right, so these are the stocks that HDFC Midcap has added in February. Now what they have sold? Again, not major. Apollo Tyres holding was 2,000 crore, slightly reduced by 159 crore. Emphasis. So you can see 4 tech stocks they have reduced. And very interesting observation. So Emphasis, it was holding earlier 1388 crore, reduced it by 160 crore, not much, still holding 1200 crore equity. Hexaware, it was holding 1000 crore, sold 331 crore, now holding 700 crore. Persistent. So on one side, HDFC FlexiCap has bought 1000 crore worth of Persistent. Your HDFC Midcap has sold 434 crore out of 2000 crore, still holding 1579 crore of Persistent. And finally, Coforge, it was holding earlier 2500 crore worth of Coforge, sold 700 crore, still holding 1800 crore. So these are the selling that has come from again, why selling from tech sector? We have discussed in the previous video also. The way AI is disrupting the space, some fund managers think that it can be disastrous, while some fund managers believe it can be an opportunity. At the moment, they're reducing exposure from tech companies, right? Then next mutual fund I want to discuss in mid-cap categories, Kotak Midcap Fund. And this fund has generated 19.46% CAGR since inception. Let's have a quick look at the details. Expense ratio only 0.38%, one of the lowest in the category. Exit load is 1%. AUM size is around 61,600 crore. Age is again 13 year, 2 months for the direct category. The regular category was launched on 12th February 2007. So next year it is going to complete 20 years. That shows the track record, right? Next, 10,000 rupees of investment done 10 years ago would have generated, total investment would be 12 lakh. Your corpus would be around 30 lakh. That's a CAGR of 17%. And this is after the correction, okay? Mind you. Next, if you look at risk return metric, especially your Sharpe ratio and sort, again, not great. It's like within the category return, it's 1.66%, category average is 1.65%. Likewise, your Sharpe ratio. Then if you look at the equity exposure and the breakup, it's completely invested in equity. Within that, large cap is 12, mid is 73%, and small cap is 13.7. So broadly, your nearly 86% is in mid and small. Then if you look at the top sectors, again financials is at the top with 22% exposure. Cap goods investing at 15.35%, followed with healthcare and then chemical. Now what are the top 4 holdings? First is GE Vernova T&D. So it's a transmission and distribution basically into your grid energy. I've discussed it in the previous video also. Parag Parikh is betting on your power grid. And here they are betting on GE Vernova. So if you quickly look at GE Vernova, the growth has been just extraordinary. So GE Vernova, if you quickly, so it's a play on your data center and the power theme, right? If you look at it, extraordinary growth in last 3 year, 5 year, simply brilliant. But then, in fact, the share price has been rewarded. Look at the kind of wealth it has created, right? In spite of that, like even in this weak market, it is trading near all-time high. The only catch is the valuation. And of course, the way it is growing, market will pay it a premium. The only question is how long this can sustain. Of course, data center, and like I said in the previous video also, data center is also a big theme, and this grid is a massive theme, right? India is still lagging a lot in the grid solution. That's where GE Vernova comes into picture. And of course, it is a high valuation business, but then market is paying a valuation because of the opportunity, the way it is growing. But then it comes at a risk. The moment growth would slow, there can be derating. But at the moment, it is growing at a fast rate, and that's what market is rewarding. Next is Fortis Healthcare. Again, valuations are not cheap at all. So Fortis is still trading at a P of 63. But of course, there's a decent correction that has happened. And again, like I said, hospital is a long-term story. The growth has been pretty good. If you look at it in the past, grown at 70% CAGR in 5 years, 30% in 3 years. Next, Ipca Lab is with 3% exposure, and then Kia Industry. Again, Kia is a play on your data center, right? Of course, the growth for Kia has been also great, but then the question is valuations are still not cheap at a PE of 50. So that is something that is the only concern. Otherwise, the growth has been fantastic. So broadly, if you look at it, your Kotak Midcap is betting on high growth companies, and it is willing to pay a premium for that growth. So that's there. What stocks it has bought? It has bought Avanti Feed, okay? So it's into your shrimp business. I don't track it very closely. They've recently added 642 crore of Avanti Feed. Next is GE Vernova. Earlier it was holding 2600 crore, added another 500 crore. So now it is 3100 crore, the top holding of Kotak Midcap. Kia Industry is there. Earlier holding 1300 crore, now added another 450 crore. So now it is 1788 crore. Apar Industry, you can look at this. Apar, Kia, G, that's a play on your data center and your power and grid, right? So that's where it is bullish on. Apar, it was holding 866, added another 400 crore. Like I said, I've recently done a detailed video on data center. The opportunity is massive. The only catch that I called out is valuation, right? So that's something that you have to figure out whether you are comfortable paying that high valuation for the high growth that you are getting. And then of course, Fortis is there. That also I've discussed in detail when I discussed, this entire theme on hospital space. Next, what stocks that are sold? So broadly tech stocks, right? You've got Oracle, Persistent, Wipro, Mphasis, right? So again, not much selling, but there is selling. So 1188 crore it was holding, slightly reduced by 256 crore. Wipro it was holding 751, massive selling here, nearly 50%, 40% around. Mphasis it was holding 2100 crore, sold 359 crore, now it's still holding 1784 crore. Then Oracle, it was holding 1187 crore, sold 126 crore. And you've got Apollo Tubes, it was holding 300, it's completely exited, not a big amount. But yeah, broadly the selling in mid-cap space, be it your HDFC, be it Kotak, has come from your technology space. Another name that I want to discuss, again, not in the sense that it's a the top fund, but in a sense that there was a period when it was outperformer, and recently it has been one of the worst performer. All in all, the returns are exceptional, 20.5% CAGR. But recently, its NAV has fallen significantly, right? So this fund, look at this, it's a 33,000 crore AUM. A lot of people have invested in Motilal Midcap. Very interesting, if you look at point in time return, 24. It was number one fund in the category, ranked number one, generated 58% return in 2024 versus category return of 28%. But then what happened? So a lot of people invested in 25 looking at 24 return. But 25, it was ranked worst. Like when the category average was 3%, it went down by 11%. 26 so far, when the category is down by 9%, it's down by 16.5%. Right? So the point, again, I'm not saying it's a good fund or a bad fund. I'm not commenting on that. It's all depend upon your investment style. Basically, what has happened is this phase, company invested their top holding like your Dixon, Keynes, or be it your Persistent, Coforge, they generated massive return. And that's why it became number one. They were the top holding. And this time, the equation has reversed. All these names that I discussed, Dixon, Keynes, Persistent, they have fallen significantly. And that's why it has been one of the worst performer. So always don't, again, like I said, nothing against the fund house. All I'm trying to highlight is how on 1 year it can be a number one performer, on another year it can be a worst performer. Then if you look at the risk metric also in 3 years, nothing great. In fact, Sortino ratio is quite low. So basically the point is it might outperform the fund, but then the volatility is very high. And that's where risk registered return of Motilal Oswal Midcap for last 3 years are not great, right? What stock it has bought? Very interesting one. It has bought Grow, right? So Billion Brain, it's there. I have in fact discussed Grow in detail. My only concern is that I'm not comfortable with the valuation. For a discount broker, 63 PE, of course it's a platform play also. Capital market itself has a massive opportunity. But again, even at this point in time, majority of business of Grow comes from your trading, right? It's a broker at the end of the day, at the moment, right? Majority of business. Of course, it is diversifying into other things, but at the moment, majority of business coming from brokerage, and I'm not comfortable paying such kind of, again, it depends, we can always argue on that. But the point is, earlier, Motilal had 300 crore of equity, today it's at 700 crore added. So now it has got 1000 crore worth of equity. MCX, again, it was holding 600, added another 690. Why MCX? See, as long as this super cycle in commodity would continue to play, MCX is going to be a massive beneficiary. In fact, MCX is one of the few companies that has outperformed the market big time. Look at the kind of return. There was phase where it underperformed for many years, and suddenly in last 2 years, boom, because of commodity upcycle, right? So a lot of people are still buying it, like fund houses are buying it. But then, are you comfortable buying it at a PE of 70, 71? As long as the growth would continue, it will do well, and eventually it will fall. But enjoy till the party lasts. At the moment, commodity cycle would continue to play out, so it looks like fund managers are bullish on it. Then Shriram Finance, it has added, so earlier it was holding 400, added another 600, so now it is 1000 crore. Kia Industry, play on data center, cables and wires. Earlier it was holding 1600 crore, added another 400 crore. And last, Bharat Electronics. Defense is a massive story. My only concern with defense is I'm not comfortable with the valuation of any of the defense company trading at a PE of 50, 54. That too when the dependence is on government order, right? So that's my only concern. Otherwise, great names. All 5 of them, great names. What they have sold? Your Airtel, Keynes, Eternal, Coforge, Persistent. At one point in time, especially your Keynes, Eternal, Coforge, they were great names. Growing at a fast rate, but then situation changed. That's why momentum can be very risky, right? Again, I'm not saying it's bad or not. That's always debatable. My style is more towards value because I believe momentum investing, where you pay a high PE multiple for a high growth company, it can backfire, right? So you have to make a fine balance. How much you want to go with value, how much you want to go with momentum. That all depends upon your own individual style. But this is something I wanted to highlight. So this is basically the top holding of Motilal. They are betting on Paytm with highest allocation, followed with Kalyan, then Eternal, then KE, and then Persistent. So yeah, that's pretty much it from second video on midcap category. I hope it gives you a good idea in terms of what top fund house in midcap categories are buying. And just let me know in the comment which is your favorite midcap fund, and also if you think is there a opportunity in some of the midcap names, just let me know in the comment. If you find this video useful, do share it in your circle. I'll see you in the next video. Till then, take care.